Here is a detailed summary of Marvell Technologies, MRVL, Q4 Fiscal Year 2025 Earnings Call Transcript, designed for clear and concise reading. Introduction. Ashish Saran, SVP of Investor Relations. Good afternoon, everyone, and welcome to Marvell's Q4 and Fiscal Year 2025 Earnings Call. We'll be referencing forward-looking statements, so please refer to our SEC filings for risk factors. Non-GAAP measures will also be discussed, with reconciliations provided in our press release. I'll now turn it over to Matt Murphy, Marvell's Chairman and CEO. CEO's opening remarks. Matt Murphy. Thank you, Ashish. Good afternoon, everyone. Marvell delivered a strong finish to fiscal year 2025, achieving record revenue of $1.817 billion in Q4, up 20% sequentially and 27% year-over-year. This growth was primarily driven by strong demand and execution in AI within our data center end market. We also saw a continued recovery in our multi-market businesses, including carrier, enterprise, networking, automotive, and industrial. I'm pleased to report that we achieved GAAP profitability in the fourth quarter and expect this to continue in fiscal 2026. Our record non-GAAP earnings per share of 60 cents exceeded guidance by 40% sequentially. This earnings growth significantly outpaced our revenue growth, highlighting the substantial operating leverage in our business model. For the full fiscal year 2025, we delivered $5.77 billion in revenue, with our data center revenue growing an impressive 88% year-over-year. We significantly exceeded our AI revenue target for fiscal 2025 and anticipate very significantly exceeding our fiscal 2026 AI revenue target of $2.5 billion. Our overall revenue growth accelerated in the second half, driven by custom silicon program ramps and continued strong growth in electro-optics. For fiscal 2025, we generated record operating cash flow of $1.68 billion and returned $933 million to stockholders through repurchases and dividends. Looking ahead, we are poised for a strong start to fiscal 2026, forecasting revenue growth of over 60% year-over-year in the first quarter at the midpoint of our guidance. End market performance. Data center. In our data center end market, Q4 revenue reached a record $1.37 billion, growing 78% year-over-year and 24% sequentially. This was fueled by high-volume production of our custom AI silicon programs. We also saw strong shipments of electro-optics products and Teralink's Ethernet switches, both growing double digits sequentially. We continue to innovate in electro-optics with our leading 800G PAM and 400ZR DCI products, and we've begun shipments of the industry's first 1.6T PAM DSP. We've also accelerated the cadence with the industry's first 3nm 1.6T DSP, offering over 20% power savings per link, expected to go into production in the second half of the year. The distributed nature of AI computing makes connectivity critical. Hyperscalers are increasingly customizing networking, and we're seeing this momentum in custom NICs and CXL memory solutions. We're also enabling new interconnects like CPO and LPO for large-scale AI data centers. Our breakthrough co-packaged optics architecture, featuring our 6.4T 3D silicon photonics engine, has the potential to significantly expand our interconnect revenue opportunities as the industry transitions from copper to optical. In market performance. Custom silicon, Marvell has successfully ramped highly complex 100 billion plus transistor XPUs and CPUs to high-volume production on first-pass silicon. Our custom business is gaining momentum. Our two leading AI custom programs are in high-volume production and expected to grow throughout fiscal 2026 and 2027. We are also making significant progress with a new custom AI XPU design win with an additional U.S. hyperscaler, targeting production in calendar 2026, with multi-generational engagement expected to deliver substantial incremental revenue. We continue to invest across our technology platform, including 2-nanometer silicon IP for next-generation AI and cloud infrastructure. Outlook Data Center. For Q1 fiscal 2026, we forecast double-digit sequential revenue growth in the cloud and AI portion of the data center market. This will be partially offset by seasonal declines in the on-premise portion, leading to mid-single-digit sequential growth for overall data center revenue. In market performance, multi-market businesses, in enterprise networking and carrier infrastructure, Q4 revenue was $171 million and $106 million, respectively. Collectively, these markets saw 18% sequential revenue growth. For Q1 fiscal 2026, we expect approximately 10% sequential growth in aggregate, though this still anticipates Marvell products shipping below end-market consumption. In the consumer end market, Q4 revenue was $89 million, down 8% sequentially. For Q1 fiscal 2026, we expect a 35% sequential decline due to gaming seasonality. We anticipate the consumer market to stabilize around $300 million annually. For automotive and industrial, Q4 revenue was $86 million, up 3% sequentially. In Q1 fiscal 2026, we expect sequential growth in automotive, but this will be more than offset by a decline in industrial revenue, resulting in an overall high single-digit sequential decline for the segment. Summary and strategic focus. Matt Murphy. In summary, Marvell achieved tremendous revenue growth in fiscal 2025, scaling from a $4.6 billion annualized run rate in Q1 to over $7.2 billion in Q4. We anticipate strong year-over-year revenue growth in fiscal 2026, with our AI-driven data center market remaining a key contributor. Reflecting this rapid transformation, we've redirected investments towards data center and evolved our organizational structure to create a dedicated cloud data center group led by Raghib Hussain and a multi-market business group led by Chris Koopmans. We have solidified our position as a leading provider of data infrastructure semiconductors, serving hyperscalers and new market entrants building AI training clusters. We remain very optimistic about our short and long-term growth prospects and our role in enabling accelerated infrastructure. We look forward to sharing more at our Investor Day on June 10th. CFO's remarks. Willem Meintjes. Thank you, Matt. Good afternoon, everyone. Let me summarize our full fiscal year 2025 results. Revenue was $5.767 billion, with strong 37% growth in the second half. On a GAAP basis, gross margin was 41.3%, operating margin was negative 12.5%, and loss per share was $1.02. Non-GAAP gross margin was 61%, operating margin was 28.9%, and earnings per diluted share was $1.57. We saw a 1,000 basis point improvement in non-GAAP operating margin throughout the year. We generated record operating cash flow of $1.68 billion and returned $933 million to stockholders. Q4 fiscal year 2025 financials. Willem Meintjes. In Q4 fiscal 2025, revenue was $1.817 billion, exceeding guidance, up 27% year-over-year and 20% sequentially. Data center represented 75% of total revenue. GAAP gross margin was 50.5%, and non-GAAP gross margin was 60.1%. GAAP operating expenses were $682 million, and non-GAAP operating expenses were $479 million, in line with guidance. GAAP operating margin was 12.9%, and non-GAAP operating margin was 33.7%. GAAP earnings per diluted share was 23 cents, and non-GAAP earnings per diluted share was 60 cents, a 40% sequential increase, double our top-line growth. Cash flow and balance sheet. Willem Mainches. Cash flow from operations in Q4 was $514 million. Inventory was $1.03 billion, an increase to support growth. DSO decreased by 9 days to 51 days. We returned $52 million through dividends and repurchased $200 million of stock. Total debt stands at $4.06 billion. We received an upgrade to our investment-grade credit rating from Fitch in January. Cash and cash equivalents were $948 million. Guidance for Q1 fiscal year 2026. Willem Mainches. For Q1 fiscal 2026, we forecast revenue in the range of $1.875 billion, plus or minus 5%. GAAP gross margin is expected to be approximately 50.5%. Non-GAAP gross margin is expected to be approximately 60%. GAAP operating expenses are projected at $712 million. Non-GAAP operating expenses are expected at $490 million, a modest 2% increase, benefiting from higher NRE, non-recurring engineering, in the first quarter. Other income and expense, including interest, is estimated at $43 million. Our non-GAAP tax rate is expected at 10%. GAAP earnings per diluted share are projected between 14 cents and 24 cents. Non-GAAP earnings per diluted share are projected between 56 cents and 66 cents. CFO's closing remarks. Willem Mainches. We are pleased with Marvell's execution and intend to continue driving strong operating leverage, making significant progress towards our long-term non-GAAP operating margin target of 38% to 40%. We remain focused on generating strong cash flow and returning capital to stockholders. We are excited about our future prospects and anticipate strong year-over-year revenue growth in fiscal 2026. We are now ready for the Q&A session. Key financial metrics and highlights. Q4 FY25 revenue, $1.817 billion, record. Q4 FY25 revenue growth, plus 20% sequentially, plus 27% year-over-year. Full year FY25 revenue, $5.77 billion. Q4 FY25 GAAP profitability, achieved. Expected to continue in FY26. Q4 FY25 non-GAAP EPS, 60 cents, exceeded guidance, plus 40% sequentially. Full year FY25 data center revenue growth, plus 88% year-over-year. AI revenue, significantly exceeded $1.5 billion target for FY25. Expects to vary significantly, exceed $2.5 billion. Target in FY26. AI is now over half of Marvell's revenue, and approximately 75% of the data center segment. Q4 FY25 data center revenue, $1.37 billion, plus 78% year-over-year, plus 24% sequentially. Full year FY25 operating cash flow, $1.68 billion, record. Capital returns, FY25 $933 million, repurchases and dividends. Q1 FY26 revenue guidance, $1.875 billion plus or minus 5%. Q1 FY26 forecasted revenue growth, year-over-year over 60%, midpoint. Non-GAAP gross margin, Q4 FY25 60.1% non-GAAP operating margin, Q4 FY25 33.7%, expanded 1,000 BPS year-over-year. Long-term non-GAAP operating margin target, 38% to 40%. Significant risk factors mentioned/implied. Customer confidentiality and competition. Debate around market share gains by competitors for custom AI accelerators. Marvell's confidence in its customer relationships extends to next-generation products. Supply chain and production ramps. While successful, the complexity of custom silicon and advanced nodes requires continuous execution. Inventory and pricing dynamics, acknowledged as potential noise in hot areas like AI optics, but Marvell sees strong demand and healthy pricing for 800 gig. Market adoption timelines. Co-packaged optics, CPO, is a multi-year development ahead of wide-scale adoption. Seasonality. Consumer market, gaming, and industrial market can experience lumpy order patterns and seasonal declines. Highlights. Record revenue and profitability. Strong Q4 results capped off a transformative fiscal year. Dominant AI growth. Data center and AI revenue are the primary growth engines, far exceeding expectations. Successful custom silicon ramps. High-volume production achieved on complex AI XPUs and CPUs with first-pass silicon. Electro-optic strength. Strong demand and innovation in 800 gig and the introduction of 1.6T products. Operating leverage. Earnings growth is outpacing revenue growth, indicating a scalable business model. Record cash flow and capital returns, demonstrating financial strength and commitment to shareholders. Organizational realignment. Strategic focus on the data center and AI opportunity. Technology leadership. Investment in next-generation IP like 2-nanometer processes and advanced packaging. Multi-market recovery. Continued sequential growth in enterprise and carrier infrastructure. Lowlights. GAAP operating margin. Negative in FY25, though improving, and GAAP profitability achieved in Q4. Consumer and industrial market declines. Expected sequential declines in Q1 FY26 due to seasonality and lumpy orders. Transition to optical/CPO. While a significant future opportunity, it's a multi-year development requiring extensive qualification. Most important statements from CEO, Matt Murphy. For the fourth quarter of fiscal 2025, Marvell delivered record revenue of $1.817 billion, fueled by strong AI demand and execution. I am pleased to report that we achieved GAAP profitability in the fourth quarter and expect this to continue in fiscal 2026. For the full fiscal year 2025, we delivered $5.77 billion in aggregate revenue, with our data center revenue growing 88% year-over-year. We ended the year with our AI revenue substantially above our $1.5 billion target, and we also expect to very significantly exceed our $2.5 billion target in fiscal 2026. We are poised for a strong start to the new year, forecasting revenue growth of over 60% year-over-year in the first quarter at the midpoint of guidance. Marvell has solidified its position as a leading provider of data infrastructure semiconductors, with the unique business model spanning full custom to full merchant solutions. We are seeing strong investment and accelerated infrastructure from both established hyperscalers and the number of well-funded new market entrants as they race to build million XPU training clusters. Most important statements from CFO, Willem Meintjes. On a non-GAAP basis, our gross margin was 61%, operating margin was 28.9%, and earnings per diluted share was $1.57. We also drove a record $1.68 billion in operating cash flow and significantly increased capital returns to our stockholders, returning $933 million through dividends and buybacks. Non-GAAP earnings per diluted share was 60 cents, reflecting sequential growth of 40%, which is double the pace of revenue growth, demonstrating the significant operating leverage in our model. We intend to continue driving strong operating leverage and expect to make significant progress towards our long-term non-GAAP operating margin target of 38% to 40%. For the first quarter of fiscal 2026, we are forecasting revenue to be in the range of $1.875 billion plus or minus 5%.